Let's read a little bit more into the Fed minutes, and we have Anurag Singh from Ansett Capital joining in on the show right now. Anurag, hi, morning. Great to have you in the show. Are you surprised by the Fed minutes, considering the fact that almost all officials did see benefit of slowing rate hike pace? That comes as a bit of a surprise, I guess.
Yeah, so Aisha, I think while there was a consensus on 25 basis points, I think the important point is that few members, we don't know how many, but few of them were looking at 50 basis point. That means that at some point there's not a huge consensus around whether it should be 25 or 50. At least the debate is welcome. And more importantly, I think at least all of them have said that ongoing rate increases will be necessary as long as the battle is won. And I think which is where most of the puzzle lies actually. So there's nothing much you can take outside of this, Aisha, but I think much of it lies into the data we all can see, and Fed is also subservient to the data. So I think we'll have to continue watching that.
We're also listening into the commentary that came in from the Fed member Bullard yesterday, and he's working with a terminal rate of 5.375. Do you think that's a reasonable expectation, or is it expected to go even higher because 6 is now being talked about?
So Anisha, look, I think if we try and take a step back, and I don't blame Mester or Bullard, they are really talking the tone that they want to send the message at this point in time. But I think the same Bullard, if he notably quoted in December 2021 that probably by September of 22 we'll be at 0.5%, and we were at like 3.5% by that time, right? So I think they just are trying to really tone down the market signals. I think maybe the markets read too much into the disinflation word from Chair Powell, and that's what they're trying to do. But ultimately, Anisha, my message is that even the Federal Chair or the Federal Reserve officials would really can't, they will find it hard to say with certainty as to what will be the rate hike, right? Because imagine this is a problem after 40 years, US has seen this kind of inflation. Nobody in their careers have managed this, right? So ultimately, the end game is that they really do not know. Their predictions in the past have been sketchy, to say the best. I mean, they've been just trying to catch up with the inflation in the from behind. And I am of the camp that this is not going to go out in a hurry. I've pretty consistently held this view that I see this inflation rising up even now. In fact, it has caught up more speed in Jan 2023. So that's even worse.
Right. Anurag, when we just talk about inflation, you think 6 months down the line, what will be the inflation number? That's something which is keeping the markets jittery, or any of the RBI commentary, any other commentary that you're getting is difficult to predict now, because in 6 months, what will be the impact on demand and inflation is the key question.
So Pankaj, I think, and I think, look, whoever figures this out will make a lot of money, right? So I think this is a conundrum. But I think look at the data we are getting, right? Since this last minutes, we have had very hot jobs data. We had 3% spike in retail sales at the back of 22% hike in sales numbers for the past 2 years. Then we have had very hot CPI and PPI data. Regardless of what people are saying, I find it very puzzling, Pankaj, to figure out as to where in CPI or the PPE the inflation is coming down. Look at the, I want to leave with this thought that at the core of everything, Pankaj, is the wage inflation. And wage inflation is more about expectations. And we see very clearly, I think I'll just give a quick example of Walmart results. Sales rising 7%, but that's pretty much kind of the inflation that they've taken. Now, who will break this cycle of inflation where employees expect 5% inflation, repeated the wage hikes repeatedly? And if the employees are paid 5%, then of course the customer will have to pay 8% inflation, right? So that's the conundrum, Pankaj, we are on. I am of the camp, which believes that we really need a very strong. I don't want to, wish anybody away, but again, we guys are paid to be right, not to be bullish or bearish. I believe that we really need a serious recession. Otherwise, we're not going to break the cycle. And look, Federal Reserve has been at it for the last 1 year, and look where we are. Pretty much nothing. right? Limited progress.
Right. How would you rate India within emerging markets, what we have done in 2022 and, going into this global high rate environment?
So Pankaj, we did phenomenally well. And I'm saying we, still owning the wearing the Indian market hat. But we did phenomenally well. I think when the entire markets and look at China, Brazil, and even US, we had like 20 to 30% fall. Here, India just managed with like a what 2-3% fall, or not even that, right? So I think it was phenomenally well. But I think at the back of it, they were phenomenal earnings, right? Nifty earnings grew from like some 450 to what, 820, 830. So I think those valuations were warranted, and India always gets that that stability and predictiveness of the earnings, right, compared to some of these other markets. But I think Pankaj, even there, I've had this view that look, we've gone little ahead of fundamentals. We are expensive, and I think on your channel I've been talking for the last 1 year that there's nowhere to go once we touched 18,000 on Nifty. But I think if you look at it on a larger context, Pankaj, I think if we kind of went from 11,000 in 2018-19 to like 18,000 now, I think that's a good rise. So we really need to take a breather and settle down for a bit.
Sure. Okay. Anurag, great to have you on the show as always. Let's see how long this breather actually lasts. Going by the market movement yesterday, not just for us, but across the globe, it seems like it's going to be a bit of a bump here.